Hi, everybody. This is Nancy Gaskin, sowing seeds of hope and entrepreneurial opportunity in communities around the globe. This week, I've got a lot of interest in my compounding worksheets for the $1. Been talking about the significance and the magic of compound interest and the differences between something being compounded annually versus quarterly versus monthly versus weekly versus daily. And one of the things that I did to show just how powerful that concept can be is I just took a simple $1 bill and I compounded it weekly for 52 weeks. And then I did it for 2 years, 3 years, 4 years, and 5 years. And so I've had a lot of questions asked about that. A lot of people are wanting to see that worksheet. And so what I thought I would do tonight is show you that worksheet. And I know a lot of you are not math nerds. I'm not necessarily a math nerd, but I do like to see the numbers. And it just really blows my mind, even though I understand the magic of compound interest. But a lot of people don't, and they don't believe it until they actually see it in black and white. So here I am tonight, going to show this sucker to you in black and white. So I'm going to do a screen share right quick and then pull up the worksheet for you. Okay, I'm going to go all the way up to the top. Now I've got to give you a disclaimer. This is a hypothetical perfect world example. And we all know there's no such thing as everything going like a perfect world, right? But what I did was I took the average of our co-op projects since April to year to date, and I came up with a weekly average on what our projects was getting. And right now it's about 2.89% per week. Some weeks are better, some weeks are a little less, but overall, on average, since April, we have been receiving about 3% a week. So in this example, I'm going to show you what putting $1 in, what would happen to it over the course of 1 year, 2 years, 3, 4, and 5 years, just to show you the power of compounding. Okay. So we put in $1. The first week we get 2.89%, which means we're going to get about 3 cents. Big whoop. At the end of that, we're going to end up with $1.03. So instead of pulling that 3 cents out, I'm going to leave that in the account and I'm going to let that compound to the next week. $1.03, we're going to do it again. Now we're at $1.06. Again, I'm going to leave that in and I'm just going to continue that process. I'm just going to leave it alone and let it ride out week after week after week after week until I get down here to week 52. At the end of the year, I now have $4.40 in my account. This year, I earned $3.40. So as you can see, I've made well over my $1 investment, which means I am at 340% return. 340% return. If you've been following my post this week, today I posted to give you some benchmarks on what's going on out there in the general marketplace. We talked about treasury bonds, Standard & Poor, the stock market. I talked about money market accounts, savings accounts, and all of those just to give you an idea of what those investments have been providing historically over the long term so that you would have something to compare this to. Now, a lot of you may be thinking, wow, 2.89%, that's not typical. No, it's not. But our group is not looking for typical results. We are out here looking around the globe. I've got entrepreneurs all over the world looking for business opportunities that we can put our money in that's going to provide a higher than average return. We're backing this by real estate, so I can afford to be a little bit more risky because guess what? Each month I'm going to have another rent check that I can put in and invest in these projects. Our group is looking for things that in 5 years or less It could provide the opportunity for us to become financially independent. A lot of us are like myself, we're either starting over or we have a short window of opportunity. We don't have 20, 30 years to invest in order to reach our financial objectives. So just want to clear that up and let you know that little background. So year one, here we are at 340%. Now, if you were to take 2.3%, multiply that times 52, what would that be? Can you figure that out? Let me get my calculator out right quick so I don't make a mistake. 2.89 times 52 weeks. If you took the earnings out each week, you would average at the end of the year 150.28% return. But how'd this happen? 340%. 150, 340. It's the power of compounding. You didn't pull those pennies out. You just let those ride. So let's go on down to year two. We're going to start again with $4.40. Do the same thing, allow it to compound day after day, week after week, till we get down to the end of year two. We have earned $14.96. We now have $19.36 in our account. But look what happens to our ROI. This year, we got 1,496% ROI. But overall, in the 2 years, we're now at 1,836%. That's right. That's not a typo. That's 1,836% ROI. Let's look at year three. Go down to the bottom. Where are we at? $85.16. We earned $65.80 that year for a total of 6,580% that year. Over the course of 3 years, we've now earned 8,416%. Go down to year four. We're at, look at this number. It's not a typo. We're at 374.64. That's what our balance is. How much did we put in? We put in $1. So yes, that means that we are now at 28,949%. Overall, 4 years, 37,364%. Is this getting you excited? Can you see it? Can you see what we're doing here? Year five, I hope you're sitting down. At year five, our account has grown from $1 to $1,648.25 for a total ROI 5 years in our hypothetical example of 164,725%, compounding at 2.89% per week. So let's take a look at this. The bottom line summary. We put in $1. We earned $1647.25. Our ROI was 164,725%. I did a math check here to make sure that my math was correct. Now let's compare the two. Weekly return, 2.89%, 52 weeks a year. If you took your cash out, you would get 150% a year. Using this example, over the course of 5 years, you take that number times 5 years would give you a total return of 751%. Yes, that's astronomical, but that's not what we get when we compound. What did we get? We got 164,000% for a total difference of 163,974%. That's the power of compounding. You go from not even 1,000 to 164,000. That is crazy. Now, this is what you can do with $1. Wonder what you could do with $10, with $100, or $1,000. Let's take a look at it. 1648. Let's just make it simple for the math. That was with $1. If you want to see what it would be with $10, you just move the decimal over to the right. 16480. If you want to see what would happen if you did that with $100, you add another zero. You move it over to the right another place. 16480. So this is $1. This is 10. This is 100. What if you could come up with 1,000 and do this for 5 years? Add another zero. 1648000. That, my friends, is the power of compounding interest. 1.648 million. That's right. $1.648 million. With $100, $164,800. With 10, 16,480. Again, this is a hypothetical example that I am using just to show you the power of compounding interest. That's if everything went right and every week we didn't have no hiccups or no bumps, and we just continued to roll that money forward each and every week and never pull out any of the earnings for 5 years. One thing that I didn't show you in there, you might have seen those black when I had some of the areas blacked out. What I wanted to show you was in the first couple of years, it seems like nothing is really happening. It's slow, very slow, right? But eventually it's like a snowball and it starts to gain momentum till all of a sudden you're increasing by $100. You know, it starts out maybe every 6 weeks, and then it goes to 5 weeks, 4 weeks, 3 weeks, till eventually you're almost gaining $100 every other week. And then every week, the longer that you let it compound, the closer those numbers get together. And imagine what would happen if you was doing that with $100 or $1,000. Those can turn into millions of dollars really, really fast. I did one of the examples using 2242 or something like that a month that we put in. We started with 2242 and went all through, that. And after 5 years, we ended up with like 26, in that example, like $26 million over 5 years. So yes, compounding interest is real. It's not funny math. It's just compound interest. And if you want to do this work yourself, one of the problems that I found on the calculators, there's a lot of calculators out there online, but they won't allow you to compound weekly and do as high of a return as that. They're still stuck kind of like in the dinosaur age and don't realize that there's a lot of things out there right now that is compounding weekly, and we can get higher than 100% returns. And some of them just aren't letting you do that on their calculators. They need to fix that. So I went with, the tried and true trusty Excel spreadsheet where I could do the math and it would compound and I could see it visually week by week by week. One of our projects is expected to start compounding daily. So if you could imagine the difference in compounding annually versus weekly versus daily, you are talking some serious exponential growth of your money. But anyways, just wanted to drop by and let you see this for yourself. Again, we're excited to open up this year our Wealth Builders Club, and we are adding real estate as a way to leverage and preserve our initial capital. And we use the excess rental income generated after all the bills have been paid to invest and fund these outside projects. And one of the reasons why I decided to do that is it's leverage. Number one, it's going to minimize my risk. And if one of the projects goes south, or if one of the projects doesn't do as well as what we had expected, then I don't really have to worry. I can sleep at night because I know the next month I've got another source of income generated to fund another project. Make sense? We think so. So anyways, my name is Nancy Gaskin, sowing seeds of hope and entrepreneurial opportunity in communities around the globe. If you'd like to learn more about our club and getting started with us, we meet the third Tuesday of every month on Zoom. And we come in, we have a lot of fun. We're introduced to new business opportunities, and we learn and we share what we learn, and we share our experiences and our know-how. And of course, we have an Earn as You Learn program for those of you who would like to take advantage of that. So to learn more, itraininvestors.com. Go to itraininvestors.com and I'll be happy to send you some information. Thank you.